Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands, 24th day of January 2014, and this is the daily report for gold and silver. After seeing a little bit of a pushback from yesterday's dramatic rise, we do have gold currently trading higher. 1267, 1268 puts it up about $3 on the day. The high today 74, the low 56.40, and as I said, current print roughly 67, 68, up about $3 on the day. Silver, although, has been kind of all over the board, as you can see on the 60-minute chart, currently trading off about 10 cents, coming up off of these lows. These lows are at 1966. That's according to Kitco, the high 2040. We can see that right in here. And our current print puts it off about a dime on the day at 1989. We did put out a buy signal on gold and not on silver this morning. We'll see how silver trades beginning of the week and see if we want to add that to our long position. But currently we are trading long gold roughly at 1268. We'll talk about that all on today's daily report, our weekend review. Traders, we're looking at the weekly Standard & Poor's, the U.S. equities markets. And without a question of a doubt, we have seen a dramatic sell-off over this week. This is our weekly standard candlestick. No doubt, this market is under some pretty solid pressure, dramatic pressure. And what we've seen from this pressure is really the potential return to the precious metals markets. And as we saw the equities markets move down over the last couple of days, we've had a pretty much a parabolic rise in gold. Silver really hasn't followed suit. Of key importance to me was a breakout, one above this short-term double top, but more importantly, above our long-standing resistance line. And let's take a look at that chart right now. Traders, we're looking at our two-day chart. Our two-day chart has Elliott wave count, does have some fib retracement, but most importantly, and what we're taking a look at today, is this long-standing upper resistance line. We talked about this on many occasions as the market came down. This is that major rally that we had back in 2013. It stalls. Once again, market attempts, it stalls. But this time it does appear, at least for today and yesterday, to be a little bit different because as you can easily identify, we are now trading well above that resistance line at 1267. The breakout really occurred roughly at around 1260 to 1262. My question yesterday was whether or not we were going to see follow-through, because if we're going to see follow-through, in my opinion, the only right side of the fence to be on in terms of the precious metals markets right now is the long side. Now, of course, we have the FOMC meeting coming up. Next week, we'll see what kind of reaction we get from there. But we do have this market really moving solidly off of the 1186 low. This double bottom has held, and the market has broken above long-term resistance. Traders, consider this. The last time the market was at in the 1180s area was back in August of last year, July of last year, excuse me, and we saw the market move from below 1200 to above 1400, a tremendous upside move. Now, this is our secondary bottom that we've gotten just recently. This, of course, occurred towards the end of last year, beginning of this year, this being about, call it the 15th of December 2013. Market has, in two occasions, come down, tested this low, but at this point, there's no doubt we found some real support because we can see this market moving quite eloquently just off of that low and really propelling itself to higher highs and higher highs and higher lows, excuse me. Now, in terms of certain areas, we have gone over the 1257. We've done that. We've got about $10 on that. And you could see that we had a top here and a bottom here that gave us some historical reference of this particular area. It's just really steamrolled through there. It's closed above that. And our next real targets and areas are going to be as follows. Of course, we have this top here. which is just below 1300, and this set of bottoms here, which is just at around 1185. Those are the next two areas we want to see. If this market does continue higher, and I have every belief that it probably will, we want to see how it reacts here and then again here. Now, where could this market actually take us to? As I said, in terms of historical reference, we only have one piece of evidence to look at, and that's the last time the market rallied from 1186. It moved that market considerably when you consider really a $250 move. Now, when we take a look at this move so far, we are now close to what, about a $70, $80 move. So I think we have considerable upside potential on this particular run. Realize that if money begins coming out, professional money begins coming out of the equities markets, they need a place to park that money. And one of those places, I believe, is going to be a reemergence and a revisiting of the gold market. Now, traders, we're looking at our daily chart. This is the cash market or spot gold, and you can see yesterday's trading activity as this long green candle, as I said, standard candlestick chart. We haven't seen this kind of a dramatic $40 move. We have seen it before, but we haven't seen it all that frequently when we look at the marketplace itself. There's a couple of moments in time where we saw the market really dramatically take off, but what impresses me the most right now about this particular move is when we take a look at this most recent top, you can see that we're actually trading above that top. That top, I believe, is around 60 to 61. The market dynamically is trading above it. We are going into the close, and we've managed to trade above these series of tops here. To me, that's important. We've had a breakout in a number of different ways, which takes us to our weekly chart. Currently, it is in standard Japanese average format as opposed to in terms of a candlestick. So we're not seeing true opens and closes, but we are filtering out much of the noise. When we look at it through the eyes of this particular chart, we can easily identify waves 1, 2, wave 3, wave 4, and the potential, the real potential at this point for this double bottom to emerge as a bear market truncation, because the fact that it is trading at and above, as I said, we have to convert this to really see it go through the line, but the fact that it's trading at and above is really, really significant. There's no question about it. Now, as I said, that's a standard Japanese average format. We're going to convert it, and we've converted it now into our candlestick chart. And as you can see, dramatically, we have quite a difference, because in this format, let's go ahead and blow this up a little bit. In this format, you can easily identify the fact that we are trading now above this particular trend line. Our close is the top end of this green-bodied candle, of course, right here. Market's trading roughly at 1267.70, call it 1268, but it's now well above these series of tops that we have identified as a long-standing resistance area. That, to me, traders, is of critical importance on a technical basis. And as I said, the same cannot be said for the gold market. Daily chart, standard Japanese average format as opposed to candlesticks, and you can see the first thing that becomes quite apparent when we look at this chart is that over the time that the market has really rallied in gold, yes, in silver, we have seen the market slowly edging up, a series of higher highs, a series of higher lows, but you're getting this alternating candle color. Goes green, red, then green, then red, then green, red, green, red, green. So you're getting these alternating candle colors that if you look at this chart and then compare it to our daily chart in gold, there can be absolutely no doubt, but they look quite different. We've got gold and blue on the right, silver on the left. Without a question of a doubt, we don't need to be an armchair technician to see this dramatic rise that we've witnessed in gold. And we have a rise nonetheless in silver, but not nearly in the same way. Now, you get some oscillation with the color, but look at the length of these bodies followed by small-bodied candles. In gold, we look at silver, you do get these large-bodied candles to the upside, but you also are getting large-bodied candles to the downside. Now, what is that saying? Because realize that on the average charts, it is creating the open and the close, or the top and bottom of the rectangle, I should say, by comparing the current price to the midpoint of the prior candle, as opposed to a true open and a true close. And now, what I've done is simply converted our candlestick charts that were in average format to traditional or standard candlesticks, and you can really see a couple of things. The first thing that becomes real apparent to me is we have a real ceiling in silver. We have broken through this ceiling in gold. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update review. Bye-bye.